What's up, everyone? Nice to be here with you today. A little before this call started, Philadelphia announced all major public events, large crowd gatherings, canceled till February 2021, which is crazy. And I think the market's realizing that this whole thing is not going to end as fast as we thought. You know, um, and it's frustrating. I wish, not from trading perspective. Trading, we're doing well. I just wish that the whole country could have just stopped for 1 month, wore a mask, done everything tight, and now instead it's going to be a year, which sucks for all of us. So whatever. Crazy times. I guess we'll just continue to benefit, stay here, trade, make money, build up our nest egg, our profits, and have stories to tell about the profits we made in the time of Corona. Anyone new, first time here? Anyone first time on this call? Just give me a yes. So we do a market breakdown with Christian, who's a CMT, which is cool. Then we go over existing services, current events, and then we'll talk about any trades, any just trade ideas, charts to look at, anything like that. Okay, John, welcome. Everyone else is new, welcome, and obviously all returning guests, welcome. Hey, Jason. Hey, Neil. Okay. So, yeah. Hey, Pierre, welcome. So the market breakdown, let me just tell you, is you're going to look at, this isn't for anyone who just got Phoenix yesterday from the Wealth 365 event. The trades aren't put on here, just so you know. Those are sent out via email and text. This is a call where we go over the market as a whole. And when Christian does this presentation, you'll see if you could get used to, as you come back, what he's doing, what he's showing. Then we get caught up on different services we have, just trades we talk about. And then we just talk about current events and different stocks. And it's just a way to stay connected to the market, which has proven to be incredibly valuable to us. So if there's something you see here, don't understand it 100% on this call, don't worry. It's not about just getting it in one shot. Try to learn as you go. All right. That's it. Christian, you want to do a breakdown of the markets?
Yeah, let's do it. I guess on a week basis here, not a whole lot's been changing for us for the market. Certainly, it's just been mostly an up and away we go type of market, assuming you're talking about the Nasdaq and Nasdaq stocks, right? It's been really no holds barred, just up. We get a couple days down there, 1.5 days down, but all in all, it's just been up and away. One of the concerns we keep highlighting is how none of the other major indices are making that happen, right? Here's the S&P still hanging out below this high, let alone all-time highs. For the S&P, most of the week was spent just chopping sideways, not a whole lot happening. The Dow, right, same thing. The S&P was actually at least testing its high from back in June. You'll notice the Dow not even close. So the Dow is falling further behind. And, these we talk about the Russell too, but, this non-confirmation, nothing's really changing here. We talk about it each week, but, nothing's really changing, right? I mean, you look at the Russell, exactly where it was last week, the week before, it's just kind of in this general area. But that theme of, the Nasdaq going it alone is something that has stood well. We've also talked about momentum divergence time and time again, how even though the Nasdaq does continue to go higher, momentum has been weakening on a larger scale. Another bearish thing, if you will. Breadth indicators have been dropping. I saw extremes. We were talking about a stat this morning that was pretty amazing. When you look at the the NASDAQ, or at least the FANG stocks. I saw a little statistic that the FANG stocks yesterday at their high were 50% above their 200-day moving averages, which had only happened one other time, and that was right back here in February. And what I thought was more amazing was that the NASDAQ itself has only done that once in its history, and that was right before the 2000 .com burst. So we keep seeing things like that, and the non-confirmations aren't changing, the momentum, none of that stuff's really changing, and the NASDAQ just keeps going while no one else goes with it. And what we know is historically, the vast majority of the time, if not every time we see these scenarios unfold, the NASDAQ eventually loses. Doesn't mean it has to this time, right? I mean, certainly NASDAQ wants to keep chugging ahead, and the S&P, Dow, and everybody else, the rest of the market, in other words, wants to go with it. It can happen. But historically, odds favor that at some point the market will crack. And once they start running towards the exits, generally it's pretty gross, right? Same thing here. We talked about this morning about how back during this period of time, we would comment about how healthy markets take a breath. And if they don't, eventually, as the saying goes, they have a heart attack and die. That's how it goes. And we saw what happened, right? You keep going up, 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 up without any real meaningful, kind of washouts and drops. Eventually, once it breaks, it's generally not too terribly pretty, right? The big question is yesterday the start of that? Certainly, as we mentioned in this morning's ETF Spotlight, nothing about yesterday's decline from its high looks bullish, right? I would fully expect to go lower from here. And we are lower, and we were lower, but I would think lower than this. The thing that makes us somewhat hesitant to get too, cocky, if you will, on that downside potential is, several times, whether it be back here, whether it be here, any number of times we thought, all right, this is the time, we're going to fall, right? Or we broke a pattern. All we've done is pick ourselves back up. And even if it is just the NASDAQ, it's the same stocks going higher. Apple, Amazon, Shop, yada, yada, same stocks all the time. So it does make it a little hard to say definitely going down. But what I can say is when you look at all those non-confirmations, when you look at the momentum, when you look at breadth, when you look at sentiment, everything has created an extremely bearish environment ripe for a major sell-off, okay? But that's about as far as we can take it. And so if we do fall off a cliff from here, I don't think anyone should be surprised if they've been tuning in for the past couple of weeks. But in all fairness, if we rally from here, I can't imagine anybody would be surprised, because that is all that we've been doing, at least from a NASDAQ standpoint. That's all we've really been doing, especially for the past couple months, but really since the March low, right? I mean, if you think about it, it's just up, up, up and away. One day drop, really back up you go, right? We get almost no real drops. One drop, back up we go. One good drop, back up we go. 2.5 days, back up we go. Half a day, back up we go. A day and a half, right? The NASDAQ just won't give you much on the downside. So even though the bigger picture environment, in my opinion, is just, again, use that dark cloud analogy, storms rolling in. The environment right now, I would say it's just pitch black outside, just pitch black, right? But hey, still doesn't mean we're guaranteed any rain. So it's where we are, and certainly every big sell-off starts somewhere. Yesterday definitely could have been it. Certainly, I would think that we have more than just today's little drop coming to us, is what it looks like. But we've thought that a couple other times in the past few months as well. So as far as smart trades go, I'm going to guess many of you have gotten the alert that went out a few minutes ago. Sent it out right before we started the call. So I imagine many of you got that. Tough decision on the TLT trade, but I decided to go ahead and close it out. Our backs are up against the wall. We've only got a couple days. And we talked about this yesterday as well, how it's a challenging spot because the trade is doing everything we thought it would do, just not as quickly as we thought it would do it, right? We got in right here when we broke through this trend line resistance that we had tested 1, 2, 3, 4, 5 times. Broke through, we entered. We conceded that if we pull back, we should hold that same green line on a pullback. As you see, we did, as if it knew it was there, right? Started to turn higher. Things are going pretty well. Friday into yesterday hurt us a little bit, right? Because we were almost there. One more good day of rally or so, or a day and a half, and we're hitting our target. Yesterday really set us back, right? We're back at 165 at one point. Today, we're back up at that Friday high, and it's a gamble here, right? As I put in the alert, we could be at 170 and hit our $5 target, you bet, but we could also drop if the market rallies and be back at 165 and get wiped out. So we're kind of stuck. For me, the ultimate deciding factor is we still have our longer term puts into September, but there isn't a whole lot to comment on. Obviously, that's bearish. The TLT is essentially bearish the market. Not tit for tat type thing, but obviously when the market was up yesterday, the TLT was down. When the market dropped, the TLT went up, right? Friday, same thing. When the market was down, TLT looked great. As it rallied, it was back up. So it is somewhat of a bearish play on the market. So that's two. And then, of course, commonly, it is common. And again, definitely not a correlation here, but it's common. If the market goes into a panic mode or a big rally mode, that gold can be affected as well, that being our GLD trade. So my point is this: the deciding factor was we are very much on the bearish side. So if the market rallies, we could get hurt three different ways. I decided to go ahead and take one of those off, which was the TLT. So we didn't make a whole lot of money, 20% gain. You might have been able to get a little bit more. The price is a little higher than it was when I sent it out, but I think, or close. But so decided to go ahead and just close out the TLT and take that little gain. So it's a win, but it's not. But I just wanted to explain why we exited. It was just a tough. If we hadn't, we could have rolled it out. We talked about that yesterday, but that was going to cost us, and then I didn't want to have to depend on getting through 170, and so I just figured, let's just take it off the table. So we're out of that. Nothing really to say on the SPY trade. It's a longer term trade based, playing the market for a drop. So nothing really to comment there. And as far as the gold trade or the GLD trade goes, so far so good. Still got about 2 more weeks. We're shooting for a number like 1900. Certainly we are taking our time. We were thinking maybe 172.5 or to 175 range is where the GLD could get to. Remember, we got in back here in the 165 area, so things are going pretty well for us. We're actually up in the trade as well, but we're kind of thinking that gold could run up, another, I don't know, 4%, 4 to 5% in the next 2 weeks. In other words, running to the 1900 area. If that happens, that should get us to that 175-ish area. That was our upside. Was our upside target there? Was the top of our upside target that would seemingly get us there if it happens. So far so good. Plenty of time there. Up in the trade, dipped a little bit, turning around. Thought about rolling this one out too. Those of you that haven't been possibly catching the market cast calls or other calls, we've talked a lot about an extremely big bullish pattern developing on gold, right? I don't know that you're ever going to see a more well-formed cup in history. It's about as perfect as you could ask, right? So if we get to 1900 area, right, that's certainly going to be an area that gold might stop to think about. That might allow it to pause to form a handle if it's going to form one. Or it could just plow on through, and that's all it took, right? So very, very bullish. So we might get into this a little later. It looks like with momentum dropping here, that if it can get to 1900, that might be a time for it to take a break and take a breather. But so far, so good in that one. And that leaves us with just those 2 trades. That's it.
I like this, maybe instead of going over stocks today, because I think we just covered for the main part stocks. We could look at a couple charts we want, but I like answering some trading questions today. That's a little bit different. Annette wants to know when you get in a trade and it starts dropping, how much do you let it drop before you get out? And that's like that's an interesting question because it's not really a set number. There's a lot of moving parts. Let's just take stock XYZ. I'm making up a stock right now. And let's say it looks good and we decide to put on a trade. And let's say the market keeps going up, but this stock stops and starts going down and there's no news. Okay, well, that might be a sign of weakness for me. Let's say the stock's not going up, but the market's going down and the stock's not going down. That might be a sign of strength. And I think another way to answer that question, Annette, is like with what Christian just said for Tesla. Like he put on a bearish play and he said, unfortunately, by the time we would know we were wrong, and this is why we trade options instead of stocks, by the time we would know we were wrong, it would probably be too late to do anything anyhow. You know, but, you know, Christian, let me give you just a scenario. Bring up a chart of Uber, okay? All right. So for me, Uber looked a little bit bearish yesterday. Now it continues to be weak in today's market. And let's say I already actually covered my puts, but let's say I owned puts in Uber. So I wanted it to go down here. You know, what would be enough for you to say, okay, I'm going to get out of this trade? You know, I don't think it would be that it goes to 31.50 and it's still down with the market up. What would you look for as an idea to say, okay, now I'm out no matter what happens?
Yeah, ironically, we talked about this morning. Tiffany on our TPM live had asked about this exact question, like how to know when to exit on the on the downside. I think what we do in the profit rooms and such is a completely different thing because we set up a system where we don't have to answer that question. But let's go back and talk about something like this, and or let's put it in a TPM perspective or something outside of that, which is, I think ultimately it usually comes down to you want to have that reason before you ever even get in. You need to be able to answer that question. Okay, so take, for example, if I look at Uber, like something I'd be saying to myself is, the timing of the entry, right? What I notice a lot of time when we did coaching and when I look at the entries is a lot of times there's no rhyme or reason to when I would see a student enter something. Okay, so there wasn't it wasn't like well, I got in because of this. It was more just generic. I think it's going down. Okay, or I think it's going to go up. What you want to do is try to set up the reason to exit before you ever enter. Okay, so in other words, I would say, is there a reason to short it here, right? Versus here, 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 here. What's your reason? What's your trigger? What's your signal? So that is what ultimately gives you the reason to exit later, right? So in other words, ideally, if Uber ran back up to 34, I know that's a pretty staunch area of resistance that the stock's has hit 3 times. If we got to 34, that's a really good reason to buy puts, right? The last 3 times it hit that number, it fell to one extent or another. So if I get in there, first off, I expect to be right because what did it do the last 3 times it hit 34? In turn, though, and more valuable, is answering the question that is being asked. If it breaks above 34, oops, right? I'm wrong. It's my cue to get out, okay? So what you want to ask yourself is, what's your reason to get in? Now, somebody could say 200-day moving average, okay? Well, great. If you say right now I think it's going to stay below that, then your answer of getting out would be when it breaks back above, okay? And you could wash, rinse, repeat that with anything. Candlestick, okay, great. What is the reversal of that candlestick, okay? Lower highs, higher lows. I talk about that a lot. Let's say you say to yourself, you know what? As this stock went higher low of the day, higher low of the day. Let's look closer, right? Higher low of the day, higher low, higher low, higher low. We breach it. I think it's going to go down. So I'm buying puts here. Okay, what was my reason for entering? Higher lows, lower highs. Great. Then how would I know I was wrong? if we turned around and took out this high? Because my rationale was we should be forming lower highs as we go down, okay? So notice how the answer to the question is actually derived from the beginning. Why did you get in? What was your trigger? Okay, if you don't have one other than, I just think it's gonna go down, or I think it's gonna go up, then yeah, you're gonna find yourself in a real tough spot. Because as I always used to say to students, if there's no rhyme or reason as to why you got in, right, then you're probably gonna have a tough time knowing when to get out. You know, so I would say set yourself up for that success before you ever get in, right? That's gonna require some sort of plan, right? In all likelihood, some sort of trigger or signal, okay? And then it's gonna require patience, okay? Waiting for that to occur, okay? Google was the example we gave this morning when Tiffany had asked this question. I don't know if she's on this call, but I was saying that if Google came down to this 1475 number, right? If that's my trigger to get in, well, then I got to be patient. I got to wait for it to get down here. Okay, when it gets there, I enter. If 1475 doesn't hold, then I know I was wrong. It's time to get out, right? So, and I'm not saying you have to use this, but I'm saying whatever it is you use, you know, if you use this, that, or the other, but probably the worst decision would be, well, I don't know, this thing's going up. All right, well, good luck getting out, okay? Because how do you define it, right? You can't define, right? Well, you could have thought that on Google here. There's no definition of what you just did, because you could have done that anywhere. But I can only get in at 1475 right here on the day and or days that it hits it, right? So that's how I answer that question. You got to go to the beginning.
Thanks, Christian, and Tiffany is on the call. And that said, thanks, guys, at house, because I'm guilty of not having an exit plan. I guess fast the question. Well, you know, I don't know if it had earnings yet or not. July 14th, did it have its earnings already?
I think it's tomorrow.
Right. So the earnings trades are going to go on a different plan. Yeah. Yeah, you can't really talk about that because you're waiting for their earnings announcements. I wouldn't want to be like, oh, this is where you get out of fast right before it has earnings, because the whole point of the play was because it had earnings, right?
I know one thing too, and I don't know if this is the same as what's being asked right there. Again, just thinking back of all the times I had students ask, yeah, but what about this one right here? And I would say, well, it's the same answer though. What, you know, in other words, we can sit here and talk about this very important level at 1475 Google, or, you know, this 34 I just highlighted on Uber. That doesn't mean that every stock out there has a meaningful level, and it also doesn't answer your question, right? What ultimately answers the question is, what was the rationale for entering, right? And then that would ultimately tell you when to get out. So keep that in mind. It's not necessarily oh great, then all we have to do is just pull up every stock. Keep in mind too, by the way, if 34 was your barometer here, but you entered a short here, okay? Notice how you got to take $3 in pain and then the probably $1 break higher to know that you were wrong. Okay, so, you know, do keep things like that in mind, that it's not as easy. And again, I don't know if that's the core or the nucleus of that question, but I used to hear that a lot, where I would explain the entry exit type thing, and then say, okay, well, what about this stock right here? Okay, well, I don't know. What about that stock right there? You know, why did you enter it? Okay, I can't tell you to. We get this a lot with your trades, Adam, versus mine, where somebody, and I always say, look, don't ask me about Adam trades, Steve trades, Mike trades, because we enter for different reasons. Our exits, you know, I can't tell you when to exit somebody else's entry because they're different, you know, so just keep that in mind.
Correct. Earnings was today, Michael said. All right. All right. Okay. Let's do a couple stocks. We'll just look at a couple charts real quick. But I think overall, I think we're still in the mindset, Christian, that the market will determine the moves more than the stocks. But within that pocket, you could identify like a Beyond Meat is weak, a Roku might be in its own world. Would you say there's 2 categories or 3 categories? And let me I'll explain the question. So two categories is strong stocks, weak market, weak stock, strong market. The third category I'm putting up for contention is stocks that are going to do their own move regardless of the market. I have Roku like in that category. Like the market could drop 300 points right now and Roku could go up 2 points. You know what I'm saying? Would you
Sure.
put stocks in that third category sometimes that they're just in their own world?
Sort of. Yes and no. What I would use is so we had this dialogue often for a couple of weeks when I talked about how with market volatility being higher or high or whatnot, that ultimately if the market's making bigger moves, then very, very few stocks, if any, would be spared, right? So yesterday with the S&P dropping whatever it was 5 or 6% from its high, right? You're not going to pull up too many stocks that were able to weather that, right? So even some of those things like the Zoom, right? That had been, quote, doing its own thing. Shop, right? That had done its own thing. Who else did, Amazon, everybody was supposedly great. Look at how, if you're going to get one of these big moves. So the example I was giving and looking back at the market, where look back here where volatility, keep in mind, volatility is still very high, above the historic norm, right? I mean, even getting down here and holding in the 25 to 30 area, keep in mind during the bull move, we're in the 11, 12 area down here, right? So still more than double and or triple, okay? So what I would say is that, think of it as different bodies of water, okay? If you're out there in the middle of a pond or a lake where there's just really no ripples, no current, or i.e. no volatility, and all of us are in our boats, it is very easy for any boat to go its own direction, right? We can all sit there in one little spot, but we could all just kind of paddle this way, paddle that way. It's easier for us to go our own way. However, if we're all in our boats in the rushing rapids here, none of us are going upstream, right? We're all going with it. Some to a greater extent than others, that there's more of us in this boat and some of us are paddling to death over here, right? But all in all, we're gonna go that direction. So I would say the same thing in this environment to a little bit lesser extent. That if we're just talking about a Dow up or down 200-300 points, where in this environment that is not a very volatile day, then I think you can have those outliers. Like right now, a little bit of a mixed bag, right? S&P's up, Dow's up 300, but notice how there's still plenty of stocks that are able to be down. Half my watch list is down. Okay, so it's not that big, huge part of that. Obviously, is because we know the Nasdaq is finally, somewhat struggling for once. But overall, if the path from here to Friday's expiration is Nasdaq's going back up here, most things will go higher. Tech will probably be stronger unless something is changed, and vice versa on the downside. If we see something like this and the Nasdaq drops, takes out that low, most things, I don't think there will be things in their own world. Again, go back to Roku, right? Roku, even though it had a blockbuster Thursday and Friday, right? It was allowed to do that because the Nasdaq, i.e. and or the market, was not dragging it down. But yesterday, it was up when the Nasdaq was up, and it completely reversed and got wiped out when the Nasdaq got wiped out, right? Same thing today. When the Nasdaq and the market was down, right? It was. So I guess it depends on the magnitudes of moves. What I would say is that same thing I said last week was if you're going to go long, you probably want to be in tech names. Until we see that trend change, right? Not only are those probably going to be the stock, I mean, look over here. Most of what's green is, going to be in that area. We got W, we got NVIDIA, Beyond Meat, I believe is a NASDAQ stock. We got Tesla, we got Square, NXPI, PNW, IBM, right? Apple. Most of these, URI, Broadcom, Roku, what is that? 85, 90% of anything that's green right now is again tech, even with the NASDAQ being the weakest one of the three today. So I would say if you're going to go long, definitely look at those until we see an obvious change in that trend. And if you want to be on the short side, it's almost like I'd say be in those same names, because if yesterday was the start of something, look how bad some of those got crushed, right? Amazon dropped, what, $300 from high to low, right? Yeah, well, no, 200. Like 200 some change, it looks like, So that's kind of how I would look at it,
Rob said, can you speak to the thought process when tempted to leg into an iron condor when the credit spread moves against you to increase the net credit without increasing the spread risk? I'll answer that one. So the question is, let's say you have a bull put on and all of a sudden the trade goes against you. When do you put on the bear call? When are you tempted to do that? You know, it's interesting. So that would be like, let's say we sold the stock's trading at 26, we sold a 25, 24 bull put credit spread, and then it started trading down to 25. It looked in trouble. Instead of taking it off, he's saying, when would you be tempted to just sell like a 26, 27 bear call? So we would not, the credit would have to be worthwhile. And it's kind of like a play where if you're like, I don't think the stock's going to move that much. If you have no read on the market, that's when I would do it, because you could get good premium collection if you expect it to consolidate. So it's kind of like a, you know, hands up in the air. I just want this to be not a lot. If you have conviction, you hold it. If you don't have conviction, you could also close it if you haven't lost that much, if you think we're going to go down. And so it's kind of just have a little skin in the game and see. I like it as a feeler, really, just to kind of let me see where I landed on that trade and how am I reading it, if that makes sense. Oh, yeah. So the NASDAQ, we've been talking about that the whole time, Larry, that it's kind of just doing its own thing right now, for sure. Dennis said strong stock in a weak market, ALGN. Align Technology. So again, remember, we're in earnings season. It does have earnings July 22nd. I don't know if there's news on it. Always helpful if there is for you to let us know when you're bringing up the stock. There's hundreds of you guys on here. Align Technology, price target raised to 310, outperform. Okay. So there was news on it, which makes it less significant. Okay. Yeah, I think for the most part, this was a good call. I like this. I think there was a lot of questions, you know, where we went over education, probably more than we normally do instead of charts. What do you think, Christian? A little bit of a good change here where we got to just kind of talk things out?
Yeah. I like the idea of being more, you know, specific on the stocks rather than just kind of throwing up against the wall and see what sticks. So I think it adds spending more of that time with topics that could really help everybody with their trading and the, you know, I don't know, the ins and outs and the strategies and the how to do it. I think that's probably a little bit more beneficial to most than just randomly throwing stocks up, and then hand picking stocks that are actually worth, you know, really where we can demonstrate and, you know, and you know, make some points. So yeah, I agree completely.